Hello and welcome to this week's special presentation. My name is Jim Penna. I'm the Manager of Retirement Services here at VectorVest, and I'm very happy to be hosting this week's topic, which is titled The Near Perfect Indicator. And it's based on a wonderful essay of the same name from my friend and colleague, Mr. Stan Heller, that was posted in the VectorVest Views in Canada on February the 18th of this year. Before I get into the perfect indicator, I just kind of want to lay a foundation here for what we're trying to do in this presentation. And I found the quote from the legendary Green Bay Packer head football coach Vince Lombardi, and he said that perfection is not attainable. But if we chase perfection, we can catch excellence. And so that's my goal in this presentation, to show you that what we seek is not perfection, meaning for our discussion here that you will not have 100% winning trades. As Vince Lombardi said, that is not attainable. But we can work to improve our trading process and techniques, and from that effort, we will come much closer to catching excellence. So with that goal in mind, let's go ahead and go back and take a look at Stan's great essay, again, that he wrote on February the 18th in the VectorVest Views, called The Near Perfect Indicator. I'm not going to read word for word. I just want to hit on some of the bullet points here and then illustrate some of the concepts that Stan talked about. Now, just a great opening to the essay. Traders and investors are always searching for the perfect indicator, the Holy Grail that never loses. And he says, how do I know? Well, I'm one of those people. Sorry, but it doesn't exist. And he couldn't be more correct there. He talks about gaining a trader's edge if you are confident in certain technical indicators, talking about some of the more popular ones, moving averages, support, resistance, etc. Then he comes down to the core of his essay here and talks about the near perfect indicator that he uses and many of us here at VectorVest use, and that is relative timing. In the VectorVest program, RT, or relative timing, we'll talk about the definition of that in a moment. Dr. DiLiddo has written many essays about it over the years. Stan has written others as well. And I love what Stan expands on it here, where he talks about RT is excellent on its own, right? Just using relative timing as an indication of the movement of the price of the underlying stock is wonderful. Remember, it's a proprietary indicator that we use, but Stan takes it to the next level and says, more and more I like the 40-day moving average of relative timing, especially in the volatile markets that we're seeing so far this year. The 40-day moving average is part of what we call the Midas touch system, or the Midas touch graph layout. And I'll show that and illustrate that in a moment. But Stan goes on to talk about a very easy way you can use this to gain that edge and to get into trades precisely when upside momentum is increasing. Okay, the rules of market timing will always still apply, though, and that's a great point Stan makes. We're still going to heed the color guard for when it's time to buy. But when it is time to go in, Stan walks through the process here, talks about finding the Midas touch graph and adding the 5-day moving average to the 40-day and simply putting the buy, sell, or hold rec ribbon on top of the graph. And again, I'll walk through that all in a moment. And there are 3 simple rules for the safest setups for when you're ready to buy a particular stock or ETF. Number 1, the 5-day moving average of relative timing has recently crossed above the 40-day. The 40-day moving average of RT has stopped falling and is either flattening out or starting to turn up. In other words, consolidating, finding that valley there and beginning to at least flatten out, if not already turning up. And then for the very safest entry, it is prudent to wait for the next buy rating if there isn't one already. And Stan finishes up here, says that's it. Once you start looking for this pattern, it will literally jump off the page for you. It will tell you 3 things: the trend, how strong the trend is, and the safest times to buy and sell. Okay, so just wonderful content from Stan. And from here, I'm going to go back and talk a little bit more about relative timing. Now again, relative timing is a proprietary indicator within the VectorVest program. And it is defined in our program and computed from an analysis of the direction, magnitude, and dynamics of a stock's price movement day over day, week over week, quarter over quarter, and year over year. It is the T in the flagship VST vector that we use to rank and analyze stocks. It's the technical indicator along with value and safety, which are the fundamental indicators. It's on a 0 to 2 scale, and anything above 1 would be considered favorable for the stock or ETF that we were addressing. So as Stan stated in his essay, relative timing is an excellent indicator on its own. But the purpose of tonight's presentation is to show you a great process that uses RT to create those precise entry points that Stan talked about when buying or selling stocks. Before I go into the program, I'm going to start with a slide that I created here of Apple. It's a 1 year, well, actually a little bit more, about a 1.5 year look back on Apple, just to illustrate what we're showing here. Then I'll go into the program and show you how to set up the Midas touch graph to be able to do this. But you'll see the white line here represents the 5-day moving average of relative timing, and the red line here is the 40-day moving average of relative timing. And putting the moving averages on relative timing is a great way to smooth out some of the day-to-day volatility so that we can get a truer sense of the real momentum or movement of an underlying stock or other asset. And if we look here, I'll start here back in December of 2020, we saw the 5-day moving average cross above the 40-day moving average as it began to kind of find its bottom here and consolidate. So that would have been a great time to enter into the trade, again assuming the market timing indicators are in place. It did have a buy rating on Apple at that point, and that would have been a great time to get into the stock. If you use the process and wait for the 5-day to cross below, generally you will give back some of the profit. So you may want to be a little more active in protecting and managing the trade, perhaps profit locker stops or trailing stops in some form or fashion to be able to capture those nice trades. Remember, this is more of a swing trading style here. So just keep that in mind. It's really the entry points that I want to focus on. Although many times if you use the exit just as the crossover to the downside here below the 40-day, you'll still reap profits. Just you may want to capture some just a little bit closer to the top here. So once again, we saw the 40-day moving average find its bottom here, and then the crossover occurred. Right? And again, had you held here, you might have had a smaller loss here. The great thing is, even if you follow the exit strategy of waiting for the 5-day to move below the 40-day, really one of the big positives there is that while you will give back some profit, it's very rare that you'll suffer any large losses from this trading technique. Again, another great time to enter into Apple, and we can see it as we continue to go across the board. And this, again, dates all the way back to October of 2020. So that's just a quick visual of what the 5 and 40-day moving average can accomplish. Let me go ahead and go into the program and talk about setting up the Midas touch graph so we can follow these stocks. So from the home page, I'm going to go ahead up to the main toolbar, and I'm going to take us into the Graphs tab. And you'll see I do have Apple up here, and again, we can see the same idea here. Usually we'll default to either the VectorVest layout or VectorVest simple. So I want to start here just to show you how to access and create the graph that we're using in the presentation. So from whatever graph you have up, you can come to the select layout and choose the Midas touch graph. Okay, when I pull the Midas touch graph up, what you'll see is, of course, the price of the underlying stock up top. Down below, when I scroll down here on the control panel, you'll see the 40-day moving average down on the subgraph. And up top, the Midas touch uses moving averages on the stop price. For now, I'm just going to take those off the graph and just leave the price. So now I've got a 1-year look back of Apple. And then finally, what I'm going to do is just simply add the 5-day moving average. And for the sake of being able to see that a little better, I'm going to change the style. I'm going to make it white. And I'll even make the line a little thicker there so we can get a better view of it. And so that's all you have to do to set up the graph using the 5-day and 40-day moving average. So again, if we target some of these dates here, we can see over in the upper right portion here when the crossover occurred. In this case, November 18th of 2021 would have been a great time to enter into an Apple trade, and we can see that it hit a high on that date of all the way up at 179. So that's a wonderful move. The 5-day turned over, and it took a while to come back here, and that's why I say, perhaps a trailing stop, and there are management techniques that will allow you, again, as somebody looking for that trader's edge, right? Perhaps a trailing stop or a profit locker stop would lock in these profits much higher. So now that we have our graph set up, let's go ahead and go back up to the main toolbar, and I'm going to take us to the Viewers tab, the stock viewer, and we're watching this in real time. And I just want to break this down, and we'll take a look. We'll graph the top 20 stocks using our 5 and 40-day moving average graph setup here, and I've got it set to a 1-year. Let's give this a little more room. And we can take a look at the top VST stocks as a starting point, again, to get a sense of how precise these entry points really are using the 5-day and the 40-day. So again, if I go back to Nucor, we had that crossover on February the 4th. We can see the 5-day crossed above. Did it do it even? No, it took it place on the 4th of February. Stock was trading at 111 and just continues to rise right up to right now where it's up at 166. So a great time to have been in Nucor using that process. Again, Steel Dynamics would have had a wonderful time. Now another great entry point using the process. This was a utility, EQT, another great entry point if you were looking to get in. And again, just a good indication. Now, again, it's not perfect. Not every stock is going to get you, as soon as it crosses over, is going to have a huge rally. There's always going to be drawdown. There's never going to be 100% winning trades. That's why it's called the near perfect indicator. And you can see many of these wonderful entry points that we see. And I'm just clicking through these top stocks here to give you an idea of these entry points and what they can look like, especially when you find it down in the valley when relative timing has really consolidated and found a bottom here. And these are where the nice longer term rallies really come in. Okay, and that's just some of the top stocks that I wanted to walk through here. Another one of my favorites, a stock that we had in our retirement coaching group, Buy Rights, Alcoa. This would have been, again, another great indication of when to get in here. Alcoa had a great run, or still having a great run, even if you had gotten in and out of the trade here based on that, or just wanted to capture profits. So that's just looking at the top VST stocks. If I come back, another way that I like to use the 5 and 40-day moving average crossover is if you come down to the RT Industries. And if I'm looking at the current relative timing, the top RT Industries by relative timing, it starts with steel as we speak in real time. I can view the stocks within that industry group. So if I look at the best performing industry right now, I can find those stocks and take a look and see where they are at this point. And Timken Steel, okay, has just crossed over. In fact, I think is today is the crossover as of right now, right? And so you've got TMST as a potential candidate. Simple process of just taking the highest ranked RT industry and finding the top stocks. Okay, there's some candidates here that are just crossing over or beginning to move up. Okay, you've got probably some that aren't quite there yet, and that we would stay away from, obviously. So again, not every stock is going to show the perfect formation, but there's another way to recognize some of these stocks. Now, oftentimes the top stocks here, as with the fertilizers, if I go to the stocks in the industry group For the second highest rated RT by industry, you're going to see Mosaic at the top of the list, and obviously, again, that would have been a wonderful time. You feel as though you may have missed that one at this point. That's going to be up to your determination as a swing trader. Is it still a good time to get in? You'll see a lot of these fertilizers companies, chemical fertilizer industry, have had a very nice run, and it would have been great to have been in that industry or these stocks when that occurred. So here's a way that I look at to help us find those stocks maybe a little bit earlier. If I go to the Unisearch tab along the main toolbar, one way to do it is I come to the Delta Searches Industries. And so if I click the 10-day RT Delta, what that's going to do is bring up the industries to the top of the list that have had the highest move for the industry on their delta. So the delta for the stocks within the food, sugar, flour, grain industry, right, the delta is up over 31.5% over the last 10 trading days. How could I put that to use? Well, if I right click on that, I can view the stocks within the industry group. And when I do that, in this case, Archer Daniels comes to the top of the list. If I right click on Archer Daniels and I want to graph that stock, I'll see a stock that has been performing unbelievably well, and a stock that just a week ago, it was on the 7th, a week ago today, that the crossover occurred. So I don't feel as though I'm really chasing the stock here. It didn't happen today or yesterday, but the stock has had a wonderful move to the upside. It's a good quality company in an RT industry that is doing very well right now. And so I kind of practice what I preach here, and I went ahead actually yesterday as I was preparing for the presentation, and I actually bought some Archer Daniels. I bought actually some call options on Archer Daniels based on that crossover and an industry that is doing very well right now. Okay, I'm going to go ahead and shift gears here a little bit, and we talked about the precise entries to enter into a trade, again, as Stan put it, to gain that trader's edge. Well, shortly after Stan's presentation, Dr. DiLiddo was kind enough to send me an email, and I wanted to share that email with you and then show you not only that we can use the 5 and 40 moving averages as a great entry point, but we can also use it as a great way to protect our portfolios. And always great when Dr. D tells you he enjoys listening to your presentation, so that's wonderful. And Dr. D went on to say, it occurs to me now that the near perfect indicator can be used for knowing when to buy and sell puts. In other words, what Dr. D is referring to is the protective puts, or the strategically defensive measures we take to protect our retirement nest egg, our net worth, from markets as we're seeing now. And he went on to say that protecting a retiree's money is a big deal, and it sure is. So what I wanted to do was share with you the ability to use the same process to help protect your portfolios. And to do that, I'll go back to graphs. And what I have set up here is the same setup with the 5-day and the 40-day moving average. And I've put together just the ETFs that track the major indexes. You have the diamonds, which is for the Dow, the SPY, the Qs, and the IWM for the Russell 2000. Now there are many ETFs that you can do this with. These are the ones I choose. If you have any type of prudent to conservative retirement portfolio in place, these ETFs are a great way to help protect your overall portfolio by buying put options at the proper time as an insurance policy. And so let's go ahead and take a look at some of these. I'm going to take these graphs back up to the top here, and we'll start with the Dow Jones. We'll come up to the control panel here and we'll take a look. So I've got a 1-year look back here, and if we begin to take a look at when the crossovers hit here on the Dow, and we'll see back on 9/10, September 10th of 21, the Dow Jones ETF, or the diamonds, had the crossover to the downside. Now, so that's a big move, and that's a great time to be defensive in your portfolio. Okay, so I get a lot of questions in our coaching group and through our retirement courses about, when is a good time to be protective in my portfolio? Well, listen, I worry a lot about my portfolio, and sometimes it may take just one or a red light or two to protect my portfolio. Usually I use the DEW as the line in the sand, but this is also a great way to find that opportune time to protect your portfolio. Would have come in handy again right here when the diamonds crossed over, the 5-day crossed below, I should say, the 40-day. The diamonds were trading at 353.85 at the time, and boy, wouldn't that have been a good time? And I'll be optimistic and pick these low points here. Right, it was down as low as 326. These are significant times to mitigate any type of loss in your retirement portfolio. So a great time. That's the diamonds. Let's try the SPY. If we take a look here, right, some of the clear times where that crossover occurred, like January the 10th of this year, would have been a wonderful time. And even if you did wait for the crossover back to the upside, you still would have profited. But the SPY was as high as 465 when that crossover came. That's what it closed at. And if I come down even to any of these times, even the day it had the big move up, it still, on that day, closed at its high of 428, or near its high of 428.30. These are significant moves in a great way. What if you've got some tech stocks in your portfolio? Well, would have been a great time to protect those positions, right? Maybe you own Apple or Microsoft for a long period of time, and you're not quite ready just to sell them because the bearish indicators come in. You can protect your overall portfolio with put options using the 5-day moving average crossing below the 40-day moving average as your bearish signal. And again, just another great look for the small caps, okay, as they took a beating as well. And we would have been able to protect our portfolio using those indicators. So just to summarize, the near perfect indicator is just a great time to have precise entry points into the market when it's time to buy, and a great indicator of when to protect your overall portfolio when that 5-day moves below the 40-day moving average on the index ETFs that we talked about. So remember, perfection is not attainable, but if we chase perfection, we can catch excellence. Thank you for taking the time. Thank you, Stan, for some great content, and I look forward to seeing you next time.